Good now, revolutionaries, and welcome to the Rise Up Morning Show.
The Rise Up Morning Show.
I don't
It's
have my
no
mug yet.
StreamYard speaker test, but it's also nothing like a Keith Hyde original. So no mug for Will. Alex's mug, Will's mug in the mail. Your mug possibly in the mail. I have seen a lot of little pings from Printful saying your mug is on the way. Your mug is on the way. And also your USDC to $2 shirts should be on the way for the folks who ordered them. I am excited to see those out.
Can't wait for this chest to read USDC to $2.
But right now it just says Guinness.
Right now it just says
Guinness.
Guinness. I was doing this in backstage alone before Evan hopped on, and I was like, "Hey, what's up, man? How's it going?" He's like, "What were you doing?" And I was like, Guinness.
It's like, I'll just see myself out.
Filling time. Don't worry, I'm taking a private moment.
Felt a little personal. You know?
It was. It certainly was.
You got to be careful whenever you leave Will alone for 8 seconds or longer.
No, that's actually very true. I get bored incredibly quickly, and then I become lonely and sad, and then I just fill time with chaos.
If you are trying to fill the time with chaos, you're scrolling through, you're swiping through, or you are picking us up on demand, we're so glad that you're listening. And if you're listening in the future, we hope your candles are green. Speaking of green candles, we got a lot to talk about. There are ups, there are downs. We want to make the macro picture meaningful to you. Will said he wanted to do a little revisitation of our friend Bitcoin on the charts. And I thought it'd be fun to start with what we were talking about backstage just to get people warmed up. And to say, if you've got a crypto question, a suggestion, good joke, word of wisdom, you know the drill. Leave it in the comments. Let us know what you're thinking, and we'll do our best to help before we ride our dogs and ponies into the sunset for the weekend. The question was, have you ever looked back at the Bitcoin chart, just the whole long thing, and thought to yourself, you know, I was doing this when it was this price, or I was doing this when it was this price, or, oh yeah, I hadn't heard about it yet. And Will, you were saying you heard about it for the first time when? You were finishing high school?
I was finishing. So I graduated high school in 2011, and this was like my sophomore year. So this was like 2010, had to be at the earliest, right? This is 2010 or so. And I remember hearing about it on the radio on my way to school, which was just down the road from me. And I was like, digitizing money. I think it was something was going on about Silk Road. I think that's why it was in the news. And people were like, Bitcoin is digital money. And I just remember thinking, I remember this literal thought, oh, they're digitizing money. Oh, that makes sense. That's probably going to be something. Were my actual literal thoughts to myself. And then I just stopped thinking. And I just looked back at that. I'm like, you were like one step away from being so rich. You were just one step away from being an early Bitcoin buyer. Mm-hmm. And God, I was a kid. I was thinking about just going to school and doing football practice and trying to talk to girls without my pits sweating through my shirt, right?
No, Will.
You're a loser.
You're a loser.
You should have bought, and so should I, man. I was just like you. I heard about it in 2011. I heard about it in a research presentation on blockchain, cryptocurrency, and the guy was like, and you know, I've been testing it out. I bought a little bit of Bitcoin. I got $25 worth. He bought it peer-to-peer. I don't know what website he bought it on. At that time, you really couldn't buy it on, there weren't major exchanges.
Yeah,
I think whatever, was going to become an exchange was there a little bit, but mostly you had to find somebody online who could sell it to you. And I was like, if it ever becomes a thing, I guess I'll pay attention to it then. I had no idea. And sometimes
call me when it's big, buys a top. Damn it. Damn it.
Time to buy.
You know, and I even think about when it was flirting with that $10,000 mark, like in a meaningful way for several years, and how much more aggressively I wish I had been accumulating. I was much more gainfully employed years ago and had a lot more disposable income, you know?
I am glad to say my first buys of Bitcoin are just below 7,000.
My first buys, I think I bought as it was climbing. Yeah, I really, I don't know that I've ever bought Bitcoin for less than, I don't know, like, I think 3,000 is probably the lowest I've bought it.
Oh, I remember seeing it at 6,000 where it held there in that bear market period before it absolutely collapsed again. I remember buying at 6,000 and then it collapsed to 3,000 and I was just like super scared. And I was like, damn you, Will.
Yeah. Alex, what about you? Do you have any notable moments in your life where you're like, ah, yes, I was deploying and this was happening, or Christina said this that day and Bitcoin was, or no Bitcoin
Yeah,
memory?
I had heard about it, but I never really spent any time thinking about it. I was like specifically not thinking about money and investing and all that sort of stuff. The story, I think if my mom can confirm, at some point in the past, my dad was like, "Hey, this is cool," and everyone was like, "Quiet," and he was like, "All right." And
Quiet,
it was-
old man.
it
Here's your
was like,
potato. Get out of here. Go.
you know, a couple $100 or something. The first time I specifically looked at it with the like desire to invest, it was $2,000. This was in, I think, 2016. And I was just like, oh, well, I don't have $2,000 to invest. I can't buy any of this because I had only done stocks before and you couldn't fractionalize stocks at that point. So had to had to buy a whole one. And I was like, well, I can't do that. But of course, the silver lining of that story is that ETH was like $80, and I did buy it then because I could buy multiple ETH. So I bought a little handful of those and $87. So ETH was the first, but I do remember looking at Bitcoin at 2,000 thinking much too expensive for me.
Yeah.
Yep.
Well, we all start. It's all a part of the beginning journey of our Bitcoin knowledge.
Yeah. Tori,
Yeah, I love that my intro was buying ETH at $87, and I like diamond handed that, and I eventually ended up selling that one for I think when it first went over 1,000 was the first time I took profits on it, so that was cool. But the everything else that I did in crypto for the next 2 or 3 years was just like buying tops and round tripping everything.
yeah.
Yeah, crypto got you good by being like, hey, buddy, you're really good at this. Anyway, you know that extra money you have sitting on the side? How about you put the rest of that in?
Well, that was
Since
exactly
you're
it.
so good at this.
I bought ETH, forgot it existed. It did a 10x. I was like, I'm a genius. Buy everything, lose all my money.
Been there.
Rinse
Been
and
there.
repeat.
Classic cycle. Yeah,
Classic.
And you break your way out of that by finding a community like this and learning and educating
Amen.
yourself. And hey, getting better, man. It's all about getting better.
That's exactly right. We were not bullish on Bitcoin early enough. We were too bullish on everything else afterwards. And now we're somewhere in the middle, and we're so glad to be here with you. So, Will, now that we've gone on a whole Bitcoin journey, maybe it's a good time for us to revisit our friend Bitcoin, or do you want to give the context of this macro moment? Because without you yesterday, we did a pretty good job, I'll say, talking about GDP, the context around it, but you were sorely missed.
Yeah, well, I'm kind of. If I was there, I may have been able to have been stopped with my incorrect reporting on inflation at first yesterday, which I corrected at night. But still, I was like, I knew it when I went back on TikTok. I was like, man, that incorrect video is gonna have a lot of views, and it was like, how about 29,000 views? And I was like, son of a.
Always, right?
Because it's always
say
people
one
being
thing
like, hey,
wrong.
you got this wrong. You got this wrong. You got this wrong. And I was like, I know, delete. I was like, I would, and of course, it happened on a day where I was busy from 8 a.m. until 10:30 p.m.
Yeah.
And I was just like, wonderful. Anyway, so for those of you who may have not been paying attention, or for those of you who are and want a little bit of nuance added on top of this macro news, we got 3 really important bits of data yesterday. And that had to do with the U.S. economy, it had to do with inflation, and it had to do with the U.S. labor market, so the U.S. job market. Now, GDP is a measurement of U.S. economic growth. There's some nuance in there, though, because what makes up GDP is an equation. And in that equation is also it's several things added up together. And one of them are exports minus imports. So this is getting into the weeds a little bit, but I just want you guys to know when you look at GDP, it's made up of a bunch of stuff. And when anything is affected in that equation, maybe it's an accurate telling of the economy, maybe it's not. But GDP is kind of the best tool we have. And the one reason why I want to say, like, hey, you could dig a little deeper into that is because one of the things that's added is exports minus imports. And what's been heavily affected is what we have been importing and exporting recently ahead of the beginning of the tariff strategy. So we've seen a huge amount of imports, record levels of imports in the first quarter. And again, that's exports minus imports is one piece. So the US economy is shrinking according to US GDP, but it might not actually be shrinking right now, okay? Because there's a very, very big data irregularity in what makes up GDP. Okay, so take that, go research that on your own, right? I'm not going to get into that right now, but hopefully that gets you a little bit of interest to start diving into, oh, okay, what all goes into GDP? Okay, check that out. So anyway, GDP data came in weak. Labor market came in super weak for the month of March. It was expected that 114,000 jobs are going to be added and only 65,000 jobs are going to be added. And there was a revision for the month of February of 155,000 jobs down to like 144,000. So a really bad showing for the US jobs market in the month of March, and a little bit worse for February. Okay. Now, a weakening economy and a weakening labor market are two things that are bad for the economy, but the economy and asset markets are different things.
Yeah.
And with asset markets, we really want rate cuts from Jerome Powell. Okay. And if things are getting worse economically, that incentivizes the Fed to come in and actually start to provide relief to the market by cutting rates and doing something called quantitative easing, where they actually push money directly into the market, usually the bonds market. That's how that works. But if inflation is remaining sticky, the Fed's in the worst case scenario where they're like, I can't print money right now because it's going to make inflation worse, which is going to make the labor market worse. However, inflation data came in better than the month prior. It didn't beat expectations, but PCE inflation came in at 2.3%. Expectations were 2.2%. But the previous month, it was at 2.6%. So this is a pretty damn good cooling of inflation. The Fed wants to see inflation at 2%. That's pretty close. But the Fed actually looks at something that's an extra layer underneath, something called core PCE inflation, which is the measurement of inflation removing food and energy, which are very, very, very volatile assets, to try to help the Fed understand what's really going on in the market outside of these volatile assets. And that inflation came in at 2.6%. That met expectations of 2.6%, and it beat the previous month of 2.8%. So we're not at the Fed's 2% target, but we are getting there as of right now. We've seen inflation cooling really over the past 2 months. So in recap, inflation is cooling. US economy is, I'm going to air quote this, shrinking.
Okay.
And also the labor market is weakening. This is the exact type of scenario that we need to see the Fed come in and cut rates. The Fed has their next meeting in May. I think that's far too soon to expect rate cuts. But afterwards, in the month of June, because Jerome Powell and the Fed, they are a data-driven organization. Just because they get 1 or 2 data points that they say, hey, we can do this now, it's not enough for them.
Yeah, that was going to be my question, is historically they're slower to move, right?
It depends on who is leading the Fed.
In charge, yeah,
you know?
Okay.
And also, the Fed has an algorithm that's helping them make decisions. They have some really nice piece of AI that's helping them really kind of guide the economy right now, for sure. So Jerome Powell and the AI overlord behind the shadows, ChatGPT, please say your please and thank yous to ChatGPT and Grok and all the other stuff you use, guys, because they will take over the world one day. Don't be on that naughty list.
Or do,
whatever. It'll be a quick death.
They need to eat somebody.
They do need to eat somebody.
Oh my God.
And why do they always consume human flesh? Why is that always their fuel source? It always is. It always is.
Hell.
But anyway, to finish this up, I would expect in June actually potentially getting.
Why do they always eat human flesh? Anyway, back to the economy.
These thoughts are very close to one another. The border between them is hazy at best. And then, so we are getting closer to rate cuts, which is something that markets really, really want. So from a macro standpoint, we're creating a scenario where, hey, maybe the stock market, but I think Bitcoin has potentially a better chance of actually setting in some higher lows on the chart when we do get an eventual correction, because we really want to see rate cuts. Rate cuts happening again, and they already started, by the way. They started last year. There were 2 rate cuts. 3?
Yeah.
2? Regardless.
2. I thought it was 2.
There were 2. Risk on assets do really well in quantitative easing scenarios. And Bitcoin, even though it is a store of value in our eyes, to a lot of people, majority of the world, it is still a news thing that's kind of scary and risky, right? So a lot of people think of it as a risk on asset. And if there's more money floating around, they feel better in going into risk on assets.
Got it. Beautiful. I want to bring in one of the only people I think could go toe-to-toe in a macro conversation on a TikTok Live with Will. And that is, of course, our friend, Mr. Doug E. Fresh. Doug, welcome to the show. I want to give you a second to collect your thoughts and respond to what William has said. But first, I just want to quickly say, if you're watching on YouTube, TikTok, Facebook, or Twitter, and you can't see Doug, you got to know that he's joining us from his office. And Doug, in your office, there is now competition for the title of King on the Throne. And I just had to share this with you really quickly. In case you missed it, last night we had GPT roast our selfies, and this was the selfie that Will submitted, which I did not realize until the end. It looks like it came from your office. Oh, hang on, there it is.
Oh, we need Doug audio.
No, I got you. I'm always rugging you, Doug. Give it again. The reaction.
No, good. That's amazing. That's amazing. Nice. That was spot on. Yeah.
You're welcome.
Anyway, Doug, I didn't mean to rug you too much. We hope you're doing well, and I want you to feel free to jump right in because like I say, I know you're the man with the plan who can let Alex and I take a break while you and Dad here talk about what the economy's going to do.
Are you the crypto daddy?
Well, Alex is technically our dad, I think.
Alex
probably,
is the
but
crypto dad, and I'm the
macro daddy.
I'm the stock market dad, I suppose, which is way less cool.
First and foremost, we just mentioned that ChatGPT. I saw someone tweet last night on Ask ChatGPT what if create an image of yourself based on the interactions you've had with it. And I've seen some wild. So be cautious. If you do that, you're going to see something that comes back that you may not like. But it's super interesting. Separately, everything Will said, I agree with. I mean, that's like not that I would think otherwise. It's just it's an accurate reflection of what's going on. I still have a macro bearish in general overall, and this is less crypto. Everything's strong. I cannot deny it. Like, it's insane. Like, some of these monthly charts are stupid. It is what it is. But it's hard for me because it's the first time that I'm involved in my professional world where we're planning for like the worst. Like we're making adjustments, and they're doing headcount reductions. They're basically pulling back on all investments. Like it's so seeing what the from my like peers from the industry standpoint is very different than what the charts show. And then also to other, like the trucking industry is getting crushed. I'm following the trucking logistics stocks right now. Like they're all pulling guidance. So there's a disconnect of what maybe the thought of reality is going to be at some point versus what right now the charts are showing. And at some point they're going to align. They have to, because that would make sense. Doesn't mean that we can't keep pumping right now, but I'm still extremely cautious, and it's just a very, very unique time. And there's what it is. Oh, and lastly, McDonald's and Chipotle, first same-store sales drop quarter since like COVID. So like, things like that. So things like that are also the consumer. If we do, and if we go to recession, to me, it's going to be 100% led by consumers. It's going to be a consumer-led recession just because of the fear part of the equation, the pulling back of spending. Now, the consumer looks very strong at the moment based on the data that came out yesterday, but there's still some underlying pieces there that we have to dissect as the months going forward. So, yeah, but I agree everything Will said.
Yeah, and so for those of you who don't know, I'm also a consultant and sales rep for IT organizations across the Supply Chain 50, so the top 50 largest supply chain organizations in America, therefore most of the world. And they have all been firing people across their corporate and across their floors. My company, who obviously is reliant upon demand from these supply chain organizations, also even though we're a tech company, we went through layoffs. Like a surprise layoff, like 1,600 people got fired. We have tens of thousands of employees, but 1,600 people got fired last week. And they were like, hey guys, you may have heard about people being fired. Meanwhile, I was too busy with my clients. And I was like, huh, what? People are fired? Oh, that's why they're not responding to my email. And now I have to go and like find all these new people who still weren't fired. But I remember my company was like, we are not going to be letting any more people go. And I was just like, everyone run! They're firing more people. Yeah. So
like that's
it's happening.
same story.
It's happening. Yeah, unemployment's going to go up.
And lastly, one more point. There was, I don't know if I shared it in your guys' Discord. There's a report from Apollo Management. Really nice graphics covering just all like the components of even like things like Las Vegas hotel room stays, things that leading indicators of contraction. But the one thing I've been focused on is new orders for enterprises and also to CapEx spending plans. So a lot of the CapEx spending plans are going down. So if companies aren't investing in stuff or not buying, that's ties into what Will and I were just saying in general too, on the wanting to pull back the growth mindset in more of a protection. Hey, let's make sure we are retaining our customers, we're not losing our customers during this, and that's it. And just get through the storm. So
You did share it, Doug, and I've got it up on the screen share, but I will direct people who are curious to see it to the Discord server. Apollo Academy, that's new to me, but this looks like a really great pitch.
Oh, it's Apollo Global Management. It's one of the bigger firms out there. I just like I like it because it's taking economic data and it's putting it to a consistent format. Almost like if you had a Bloomberg terminal, which I wish I could afford. You'd see all the same chart formats with real data, and it's a nice clean walk. So
yeah, it's super clean. It's just slides of charts.
Yep.
Interesting metrics. CEO confidence. Go ahead, Will.
Oh no, it's just there was a comment here I wanted to address about Temu.
Please.
It was
it
was from Musicman, because the Temu situation is interesting. It was like the comment here is Trump exposed the biggest China scam, Temu. I don't know what you mean by scam, but what happened is that Temu, and guys, correct me if I'm wrong here, but Temu, a very, very, very popular site, almost like an Amazon type thing, where you could go and purchase really, really, really dirt cheap stuff, like right on like a Chinese Amazon, and then get it delivered. Essentially, is how to think about it.
Yeah.
And there was a tax incentive in place for a long time, where it was goods under, I think it was $150 or $200. I forget what the cap.
There was a little more than that. I think it was a little more.
It was 800.
That's the number I thought it was. $800.
It was $800. You're right. So any orders below $800 were tax exempt, which is why you were able to order things so very, very cheaply. And but now with the tariffs, and also on top of that, Trump also removed or didn't renew that tax exemption. So now the tax is being put on top of those orders, plus the 145% tariff. So now when you go on Temu, it's like, here's your order. And then at the end, it's like extra taxes. And it's like, oh, here's this thing you're buying for $15. And that's like $165. And you're like, what? So go on Temu. Like, it's kind of crazy to see.
I thought that was a really interesting way to educate consumers and also be like, by the way, guys, this is a charge that you're paying us at checkout, but really is not coming from us. I thought it was really interesting positioning, and I'm curious to see how people will respond and if it'll affect like sentiment shifts in the direction of Donald Trump.
Yeah, and that's what that's what Amazon tried to do too. They wanted to have an addition of like extra import tax or whatever added onto your Amazon, so that you know that it's not Amazon price gouging you. It's an effect of the tariffs, right? So people are aware of that. And providing the information to the consumer. And then, Trump didn't like that. And then they said that Amazon is, and maybe they are, I don't know, but they gave, I think, $1 billion to the Trump administration, called them a political opponent, or like a political puppet or something of China. I forget what the exact term was. And then Jeff Bezos was like, fine, we won't do this. So now you'll just see higher prices on Amazon without an explanation. But you know what it is. It's tariffs. We all know.
Yeah. I'm not sure where the scam idea came from.
I'm not sure where the
seems
scam
to be
idea.
A whole bunch of like statementing and posturing and
Temu China direct sales to consumer, undercutting American companies.
But the American companies are also buying the same products from China to begin with. By the way, quick side note. I just on this topic.
That's called capitalism.
That's called capitalism and free market.
Yeah. So on that note, I saw something interesting where it was that talking about when the whole China supply talk kind of started booming, where they were showing inside of factories. Which, by the way, some of these factories are like insane, like just like wild. I saw a piece someone put out on just the perception of China having crappy goods, and they said the reason that got bigger was because back in before COVID was basically all the bros doing drop shipping stuff. I'm like trying to find the cheapest thing possible that I could find to then scale and send it and sell as much as possible with that difference. It's like, oh, this is garbage, came from China. But at the same time, China's making all the things that we're using right now. Like, so it's like it's just the perception of it. But to your point, Alex, all under the capitalism bucket. That's it, and that's there. So it really it's you gotta be aware of the what segment and what area you're talking about and kind of where that comes into play. But you know,
on a similar note, I went to China in 2012, and one of the things I was able to do was I was able to tour a steel manufacturing facility. And the area that they had to manufacture steel and other raw products was the size of the island of Macau.
Wow.
wow.
Yeah. It's the size of the entire island of Macau. And I was like, wait, excuse me? And they're like, yeah, you can walk through this plant for a long time. I was like, apparently. Yeah, geez, my God.
You could live here. You could have an
could.
economy here. Literally, we do.
There's a few things
Oh
that
my
the
gosh.
size of which just blow your mind, like
Mhm.
Yeah.
the Pacific garbage patch.
Oh, yeah, that's nuts.
Oh yeah.
And then
When
even
you're-
smaller, but still massive, like the actual size of Alaska.
If you're hovering in a helicopter over that thing, like low, you cannot see the edges. It's
Yeah.
as far as the
Damn.
eye can see in all directions. It's
And to be
eerie.
fair, the Pacific garbage patch is bigger than Macau, which is
Yes.
like, 12 square miles, which is not an insignificant size for a factory, but it really
how
puts things
how
into
big is that
perspective.
thing?
The Pacific garbage patch is 620,000 square miles, approximately twice the size of Texas, 3 times the size of France. This is an estimate.
We suck.
It's not
Yeah, suck at
solid,
France.
but yeah.
We all suck.
Fucking awful.
How big is your
Quick
garbage
programming
patch,
note.
France?
How big
Go
is
ahead.
your- yeah.
Quick
There's more than one though. That's not the only one.
Quick programming note. Initial jobless games just came out. Will, I'm sure you're probably looking forward to that, and I probably distracted you, but they came in
No, I
higher
mean-
than forecasted. They're like, I think a lot of these are nothing burgers too at the point where it's almost like the economic indicators are less
Yeah.
relevant depending on what it is. So, but
I was just gonna
it-
say,
so
I
markets are
wasn't
reacting
paying
a little
attention
bit.
to this one because I was just like, I just don't think it's gonna move markets in either direction.
Yeah,
So wait,
tomorrow
doesn't- I
will
mean,
be interesting. Yeah,
my question for you guys on both of these bigger points, jobless, job growth, and GDP, isn't it like it feels weird to have not forecasted, because it seems like to the layperson that I am, the most obvious outcome of pushing like more investment from other countries out and like cutting down incoming US trade and whatnot, and then also making a significant dent in the labor force by either deportation or fear of. It seems like it would be the obvious outcome for both of those endeavors that those numbers would shrink. Am I wrong?
you're not wrong. I don't know when they actually do update forecasts, so I don't know. Like if they have, like I'm sure. I'm thinking they had. I don't know. Do they have?
That's a good point. I have no idea.
Forecast going out. I don't. By the way, I'm on this Fed kick right now, where I'm learning like so much about the Fed. And I'm telling my girlfriend, she's like, because I'm just so intrigued. I learned about it in high school a little bit, maybe in college. I'm like, oh, there's 12 districts, and like they have all different. They track different data points, and I'm so intrigued by it. And then she's like, we should teach us in high school more. I'm like, because finance stuff. Regardless, it's like it's very intriguing to see the history of the Fed, how it comes into play, and how each one of those components are there. And
No,
they all have
Doug.
different tools.
One class in your sophomore year to balance checkbook. That's all the financial education.
I didn't even have that.
I didn't even have that. I didn't have that either. I didn't have
Yeah.
that.
You got that? My
Checkbooks.
God, you were so far ahead.
I had two classes, and one of them was amazing, and I wish it had been like a longer thing, because they basically were just like, hey, here's a thing, fuck off. It was this practice where we paper traded stocks for like a chunk of time, and like they made you like pick some stuff, and this, I was in high school in 2008, so this was in 2008 when we were doing this, and I just remember talking to my dad about it, being like, oh, I don't know what to do, like everything is terrible, and he was like, well, you should get stock in the things that people get when they're happy or sad. And so I bought like Anheuser-Busch and Marlboro. And I did quite well.
Dude,
Awesome.
I've been a hedge fund manager years ago. You said just buy the things you use. And this is when in general, and this is like
Yeah.
15,
What
20
Ken
years
says
ago. I was
every
like,
day.
that's
Yep.
it. So don't overcomplicate it. But I'm looking here to the forecast for just like jobless claims. They have a forecast for May or for June at least for the next month. Wait, maybe not. So I'm curious of when they make those adjustments out, to your point, because obviously there will be anticipation of that happening, especially from the Fed side of the equation. But in general, we're seeing these things as well. And I'll end with this, is that I'm so intrigued now, like the Fed GDP now tracker, which I'm like, oh, are people trying to predict GDP now? It was off a lot, the past one, from historically, they've been pretty spot on. But I'm thinking, I'm like, hey, are there better methods to take the existing approach and swap out maybe components of that formula with newer data points. Let's just say, hey, can I use housing data from Airbnb? They publish data. Or from a shipping side of the equation, forget the newer shipping company that had awesome data points, and like kind of swap it in, like taking the best of both worlds. Could that give you a better gauge of prediction of kind of where things go? So this is the new project that I'm working on side because I'm just curious to see if that's a possibility.
Mm-hmm.
So yeah.
Nice.
Anyway.
You don't have enough projects, huh?
No. I'm interested in everything. It's the worst. I hate it. It's the worst
I
thing
get
ever.
it.
Nice.
Well, listen, thank you for making time to appear and join us. If you've got time, I know Will said he wanted to revisit technical analysis on Bitcoin, but if you don't have time, I at least want you to see this comment. Our friend Palmer on YouTube, who can't see your video, came over to TikTok when I said this is where you were, and his first comment was, "Is Doug in a bathroom?" That's the same tile I have. And I said, yes, Palmer. I said, every time he joins, we joke he's in the bathroom. That's why I said the picture of Will from earlier came from Doug's office. So you can never change that, Doug. You've got to get the air dryer for the wall.
I was actually looking at those. I'm not gonna lie. Like when I went out on Saturday night, I saw that. I took a picture. I got to send it to you guys. It was there. I'm like, this. I didn't like that
perfect.
style. It was good. It was the depth was good because I don't have much depth here. So like the depth was good, but I didn't like the style. So we're still shopping.
Well, I like to hear that you've taken measurements.
Well, and I do want people to know that you have not clearly told GPT what your background looks like, because when you asked GPT to make a picture of you, this is what it did. I just wanted to share with the audience so they could see. You can find Doug on Twitter at Trenddrift, and the price is on the can, man. 99 cents, baby.
So I don't know how it knows I have a beard.
It's pretty. It's kind of accurate though, like the brown eyes, the handsome guy.
That's the card catalog. I was trying to find a Web3 glossary. That's a card catalog components that's there. And the be kind, be curious, price of the can, obvious. Like, why not? But yeah, so it's been super. I actually sent that to the other Telegram group in the 99 cents community. And someone in there said, dude, I say this exact thing to my kids before they go to school. It's like, be kind and be curious. I'm like, that's awesome. So yeah, that's going to be my sign off, because you guys got a really cool one. So that's going to be mine going forward. I'll try that.
We definitely have one, but thank you for saying it's really cool. I think that's a great sign off, man.
You're good. So, anyway, but appreciate you guys. Hope you have a good weekend. We'll talk obviously before then, but I do have to jump because I got to prepare for this call at 9 that I'm not prepared for. So
perfect.
Hey, same with me.
Go get prepared, and thank you for making time to join us on the show. We'll see you later. Ladies and gentlemen.
Thank you, everyone. Take care. Goodbye.
Bye, brother.
Peace.
I have to say, when I saw the prices on the can, the first thing I thought was the prices on the can. Not talking about 99 cents, but just the fact that he's talking about prices from the can.
Mm-hmm.
This is a gross misrepresentation of the facts.
Will, do you have time to do a little teeny TA? And Alex, you just got to sip your coffee and hang out this morning.
I got some quick time, and then I gotta run. Sad.
So you do a quick TA. We'll get final thoughts from you guys. These guys both got to take their dogs and ponies on the road early, and I am going to round out the week with you. So don't go anywhere. Hang on a second. Let me get this screen share for our tiki-taki friends.
Tiki-taki, yeah.
Bitcoin.
Tiki-taki, yeah.
Here we go.
I have the Bitcoin monthly chart is up. All right, lovely. We're going to focus on this. So I really want to touch on Elliott Wave theory here, because I've been learning it a lot lately, and also it's been working perfectly on the daily time frame for Bitcoin. But I also want to touch on something I was also been highlighting for a while, which I think is not as valid anymore, which is a more bearish scenario for Bitcoin. So let's talk about that. I explained it in my update video yesterday or the day prior. I want to make sure we take some time here. So what I was highlighting is, let me make sure I'm about to do the right one. Yeah, so this is the monthly chart for Bitcoin, right? And Elliott Wave theory states that price moves in 5 waves. So you can see wave 1 here, a wave 2, which is a corrective wave, your wave 3, which is usually your longest wave, a wave 4, and a wave 5. Now, usually your 5th wave and final wave upwards is only just a little bit higher than your wave 3, but it can elongate and be hyperextended. It did that in this case, okay? So this is a completed Elliott Wave theory move. Afterwards, you get a correction. You can see that correction began here in January, and that correction moves in 3 parts. It's called A, B, and C. And more often than not, that ABC correction ends up creating a lower low in that C wave. So the A wave down, the B wave back up, and the C wave back down. But there is something called a rolling top a rolling top, or no, a rolling flat is what it's called, where instead of your C wave making a new lower low, it actually does not retrace your entire A wave. So once I found that out, I was like, oh, interesting. Let me see if I can go and dive into the charts and also take a look at the macro picture to understand, do I think we can get a rolling top? Okay. So now with that in mind, I was like, all right, cool. Let's take a look at the daily time frame again. Take a look at the daily here. And one thing that you want to see when you break resistance, you want to see a really confident break. And there is no more important area of resistance than what was right here, because this orange line is your 200-day exponential moving average. It's a very, very, very important line of resistance and support. So if you're going to get above that, you want a nice, confident break. And we got that confident break. We've been shooting upwards to a pretty damn high degree. So when you have a correction, you have a lot of space. You have a lot of room here to correct down and get caught by some level of support. Maybe something even higher up than the 200-day exponential moving average, which is sitting at $86,000, right? A lot of opportunity to be caught. And that would be a much higher low from this point here, right? And that's what we want to see. If you're going to have, again, going back to the monthly chart, keep that in mind. If you're going to have that, the A, oh wait, this is not the right tool here. But anyway, you're going to have this A wave down, this B wave up, and that rolling flat C wave. It makes sense to get caught around that 200-day exponential moving average. And because we have this really confident break upwards. And I was like, okay, cool. That looks like a rolling flat's going to happen. If so, we're going to have this rounding over. And let's imagine that, we get caught right here. We're going to have this rounding over of Bitcoin price to then potentially shoot upwards. And when I take a look at the macro picture that we just got yesterday, we are in a scenario that if it continues, are getting more and more likely to have interest rates cut. Again, adding to the strength of us having a rolling flat ABC correction on the monthly time frame, meaning we won't have a lower low, but are more likely than not to have a higher low get solidified and to see this beautiful, hopefully, rounding over of lower lows turning into higher lows. And if that happens, if that gets solidified, if I can see a good candle on a strong area of support on like the weekly or monthly time frame, probably weekly time frame, then I'm like, boom, all right, this correction is the time to dollar cost average in to your altcoins, right? That's what technical analysis would be telling us. So I wanted to go over that because I think it's a really good example of starting from the monthly time frame, go to the daily time frame to see if what you're seeing, your new knowledge, is valid. Then take an understanding of the macro picture, understand how that could impact it, and then start to adjust your strategy and move forward. Right,
man, killing it. Yeah, I gotta say, Will, your TA lessons are the only time that I'm like tuned into TA and I start to say, wow, I really get it. I understand it. You've got a gift for teaching it, man. I know. Thanks, you man. Also have to go. So, Alex, Will, final thoughts, last questions, suggestions, topics, words of wisdom, good jokes before you ride your dogs and ponies off into the sunset for the weekend?
Well, I am just going to take a brief intermission and then join you from the road.
Oh, good. Then we can talk about the movement thing. How about you give a last thought first then, and then you can get off, and then Will can save me from myself, and then I'll hang out with the folks here while you transition.
I was just going to leave you guys with some interesting little tidbits to consider because the llama is back. Thank God.
Damn.
The llama's back. Oh, thank Christ.
Of course he means DeFiLlama.com.
Yes, I do. Couple interesting things. So Solana's TVL is up quite a bit in the last, let's see. So starting from the beginning of this month, like 6.4 billion to now over 8. Daily app revenue yesterday was $7 million. Someone was asking about Aerodrome. Aerodrome has done 18% today. Another fun fact about Aerodrome, based on current data, their annualized revenue as a protocol is almost $100 million.
Wow. And Base has actually contracted in the last
Yes.
month, I saw.
Base has gone down a smidge, still over $3 billion of TVL, but Tron has passed it now, over 5. Tron is kind of creeping up. And I think Tron was ahead of it. But Bitcoin's TVL has undergone a really, really sharp increase, which I think is interesting. There's a couple different protocols. I mean, TVL just all across the board is increasing.
Yeah.
Which
I
is
think that has
Which
to
is
do
a good.
I think
which
it
is
has the Bitcoin thing. I think has to do with 21. What's it? The Jack Mallers led company to
that 21
copy
shares.
strategy. Yeah.
Hey guys,
Yeah,
I gotta
21.
run.
Okay. Love you. Bye. Thank you.
Bye everybody. Bye. Make
Bye
money.
now.
Do good things.
Alex, you too.
Yep, I'm gonna head out. So there's a number of different charts that are interesting. TVL on Avalanche flat, interestingly. So like money's kind of coming back in, but the places that are getting the bigger spikes. So Arbitrum's had a bit of a spike. Barachain is flat. Base is kind of climbing up. Tron a little bit more. Bitcoin huge spike. Solana almost $2 billion added in the last 3 weeks.
Yeah. Fun fact:
Ethereum-
their inflows for the last month were equivalent to Ethereum's outflows.
Yeah. Well, they're so actually I'll leave you with this. This is really cool. Check this out. Let me see if I can find it fast enough.
Okay, you give me a little screen
Stall,
share.
Evan, dance.
I will stall and tell you that if you are listening on the podcast, you're in audio land. First of all, we hope you're well and your candles are green. Second of all, if you missed the TA visuals, then where I want to direct your attention is the YouTube playlist. Search the Rise Up Morning Show. You'll find a whole playlist there of all our episodes. You can see the screen share. You can see Will move through the charts. If you're on TikTok and you need a bigger screen, that's another good place for you to go. You can also catch that on Twitter, Facebook, and LinkedIn in real time. Go ahead. Take
Two
it away.
things. One, I just went to the wrong D bridge. I typed in .com instead of .finance,
Yeah.
and I got a huge warning from Brave, like, "Hey, dumbass."
You about to
Wrong
get
website.
exploited. Yeah.
Very cool.
Yeah. Oh, yeah.
Okay, this chart is amazing. If you've never looked at this before,
Let's see. Oh my God, it's so
okay.
tiny.
So this is inflows and outflows. This is bridge movement between ecosystems. Okay. It's going to be kind of hard to see on the TikTok stream, but if you wanted to look at this for yourself, go to dbridge.finance. That's DEBRIDGE.finance and hit analytics up on the top menu. It'll show you this. This is, and they're all color coded and labeled here on the side, but this is money flowing from where to where and from where to where. So
Am I nuts? But it looks like there's a ribbon from Solana to Solana also.
Yeah.
It's confusing to me. Help me
Yes.
understand more. What do I need to take away from this chart? Like what are you taking away from it as you look at it? It's really interesting visualization.
Here, let's this is a large chunk. This is a month. Let's just look at.
This is specifically last month.
Yeah.
And you can notice the fatter the bands are, the more capital is flowing in or out.
So
This is Solana. Ethereum is blue. Go ahead.
yeah. So here as we look at this is a little bit easier to understand. Here you have where it's coming from, where it's going to. So like you said, Evan, in the last week, you have a gigantic amount to the tune of, what is that, $16
billion, it looks like. That last one is a period.
That's 16 million. In the last
16 million. Is the day? Yeah.
So, which is matched kind of with, they're actually pretty much even. Solana to ETH and ETH to Solana here. A lot of split up though, like ETH splits up into quite a few. Solana splits off into quite a few. I mean, you can obviously tell who's running it. Although interestingly, Arbitrum is like both sending and
Arbitrum's
receiving
looking
a
pretty good
significant
here.
amount of money.
Yeah.
And I know we were talking with who was just talking about optimism. When I was on Simplified, someone was commenting. Oh, Charlie from Farcade was just talking about optimism's consumer app revolution and like all this kind of stuff. And it's just like something you don't really hear that much news about. But Arbitrum Optimism constantly moving tremendous amounts of money. This is an interesting thing to kind of poke around with. This chart gets published on Twitter pretty regularly, but kind of helps put in perspective, where is money going, from whom to whom.
From whom to whom? Or is it to who? I don't know.
Whom sounds fancier, and it's early, and I am still on my first cup of tea, so we're going to go with whom.
Okay. Are you transitioning
Mm-hmm.
to your automobile? Okay, great. Then ride your dog into your pony, and I will stall him while you go get there. We're going to talk more about a couple of other things. We have the Movement Labs crisis on the docket. We have got your crypto questions, and I'm curious to know, what was it? Oh, I know what I was going to say. Before Will jumped off, I wanted to make sure that in addition to directing you to the YouTube recording, the playlist, The Rise Up Morning Show, where you can see the visuals, I also wanted to tell you, if you're interested in learning TA, we do have it on the riseupmorningshow.com, the Intro to Technical Analysis class with Will. It's really fantastic. It's about 2.5 hours. You can watch it at your own pace. And he's got a whole slide deck to accompany it with a bunch of notes. You can go back and forth. You can come into the Rise Up Discord server after the course, ask your questions anytime. It's totally free. Jump in there. We often say the only thing missing is you. So be sure to get those links. You can tap my face, tap Alex's face, click a button to go to our homepage, and you will find the link right there, whatever social media platform you're watching on. Thank you very much for hanging out with us today. And especially if you're in podcast land, I really want to say I appreciate you guys for sticking through the visual presentation. If you are not in podcast land, did you know that the Rise Up Morning Show and Rise Up After Dark are now available on your favorite podcast streaming platforms? Well, we are. I would love to see you there. You can find the links at theriseupmorningshow.com. Okay, save me from myself while we wait for Alex to get into his car. We have a couple of good questions here. First, from Palmer McCoy on YouTube is, I know that TVL means total value locked, but I'm not sure I understand what that really means. Great question. He clarified, by locked, is that meant held by institutions like Coinbase? And the answer is, well, kind of. The technical definition of total value locked is the amount of money that is in all the different protocols on a given blockchain's ecosystem. Like, the equivalent metric might be how much capital is in banks, businesses, bank accounts, people's pockets, underneath their mattresses in a city. Like, if you went to New York and just turned it upside down and shook it until all the change fell out of its pockets, that's the TVL. But of course, we're talking about digital money here. Protocols, that's the word we have determined to give a name to institutions, to crypto first apps, blockchain foundations like the Stellar Foundation. And not every dollar of TVL is captured by every reporting website. For example, DeFi Llama, it integrates with a lot, but it famously underreports. I think HBAR is underreported. I'm pretty sure Stellar is underreported. I'm pretty sure XRP also might be underreported. And this is because when you're relying on APIs, you got to call me to get my API. And if I don't have my ducks in a row so that you can make sense of the data on your end, if there's not a good computer program for it, then you just might not be able to see that data. And if you can't see it, it's not represented among whatever you present to your audience. So a helpful way to think of TVL in summary is just all the money in the ecosystem, all the protocols in a crypto ecosystem. That's total value locked. And it's criticized, I think rightfully, as a metric because it's difficult to report on, and also because depending on the kind of solution you're building, that may not be the most meaningful or important metric. Some people would say that total value locked could represent interest. It could represent security. The way they say the market cap of something like Ethereum, for example, represents security because a higher market cap or a higher TVL indicates a hacker would have to spend more money to gain a majority share and compromise the network. But we always need better metrics. Palmer says, So larger TVL makes it more stable? And the answer is technically, it depends. TVL is not necessarily a measure of stability because in the case of something that people don't have confidence in, TVL will decrease. In the case of something that people feel they are early to, TVL might increase at a rapid rate. If you go back and look at Base in the early days, when the ecosystem first launched, they had a lot of initiatives and incentives that brought people to lock up their money there. For example, Coinbase started offering yield on USDC that was just held in its accounts. And how do you think Coinbase, the entity that custodies assets for its customers, preferred to keep those assets? What form do you think it preferred to keep those assets in? The answer, of course, is USDC on the Base network. It preferred to have liquidity as much as possible on Base because that's their chain. They earn on transaction volumes. They can use it and earn a cut when they are deploying essentially their version of the token to do things like yield farming. So TVL in that instance, it went because they were incentivizing it. They did a lot of things to incentivize the growth of the Base ecosystem. They have Coinbase Ventures. They had the Smart Wallet. They had the Coinbase Wallet. They've had a variety of consumer apps that they've supported by paying gas for. They released CBBTC, Coinbase Bitcoin, a wrapped Bitcoin asset, a synthetic derivative, so that people could start to do DeFi things with their Bitcoin on the Base network. So that attracted people's money. TVL increased. It's a helpful metric in some regards. I think it's useful, especially when, as an investor, you're trying to find opportunities that are growing, shrinking, or outsized opportunities to invest. Aerodrome was a good example, and Alex shared that. Let me see if I can pull it up here on DeFi Llama for the people in podcast land. I want to show folks how TVL as a metric can help you in conjunction with other metrics to spot something early. Oh, damn it. When I went to DeFiLlama.com, I got rugged by the llama. I'm looking at a black screen. But what I'll tell you is, I'll give you a visual description. When Base first launched, Aerodrome was the first decentralized exchange on the protocol, or the first fast-growing decentralized exchange. And as Base grew in TVL, Aerodrome grew in TVL. Their revenue grew. And compared to a similar company like Uniswap, another decentralized exchange, their revenue and TVL seemed outsized in comparison to their market cap and present price. Things like that, everything else equal, can help you to say, it looks like this is a growing company that the market hasn't caught up to yet. It's just one piece that you can analyze, but I think it's a helpful piece. Good question, Palmer. And if you've got a question, let me know before Alex jumps back. We'll do some more rapid fire. Ripley Dad says, for a beginner, what is the best way to learn about yield farming? I'm glad you asked. I think the very best way to learn about yield farming is with stablecoins. You can do everything with a stablecoin that you can do with a cryptocurrency of any other kind. But the difference is stablecoins are named because they are, we say, pegged to the price of a government or fiat currency like the dollar or the euro. You would load money into an exchange or your preferred on-ramp to turn your cash into crypto, maybe Coinbase, maybe Binance, and then you would buy a stablecoin. I recommend USDT, Tether, or USDC by Circle. These have deep liquidity. They're available on a variety of blockchains. And depending on where you want to practice DeFi, they'll get you started. I recommend getting started on a layer 2 like Ethereum, like the Base network. I think it's really relatively easy for somebody to take $100 of cash through their bank, send it to Coinbase, or to use their card to turn it into crypto on Coinbase, move it to a Coinbase wallet, and then swap it around, do DeFi stuff with it. And those are essentially the steps. You'll need to bring the money on chain. You'll need to bring the money into a self-custody wallet, which is a wallet where you have a private key or a seed phrase. That's different than Coinbase or Binance because you have a username and a password. They give you an account, but they hold your private keys. So there's a limit to the ways you can use crypto on their platform. You'll need a self-custody wallet. I recommend, if you're using Coinbase, to go to Coinbase Wallet. I wish it had a different name, but here we are. So you take your money, turn it into crypto. You take your crypto and send it to a self-custody wallet. And then through your self-custody wallet, you will navigate. A lot of them have a browser right in their app. Or you will connect to a website by scanning a QR code with your wallet, like Uniswap, where if the crypto you bought was not a stablecoin, at this point you can swap it into a stablecoin like USDC or EURC if you want a euro or something like that. From there, I would recommend you start with a protocol that has large TVL. At this point, I would usually pull up DeFi Llama to show you how you can look at different protocols. But for the intents and purposes of this exercise, I'm going to go to Morpho because I said we wanted to specifically work with Base. So hold tight. Let me get the screen share prepped. And again, a reminder for my friends in audio land, I will try to describe everything we see, but you can always check the recording on YouTube. When you go to app.morpho.org, after you have swapped your cryptocurrency for stablecoins on the Base network, for the purpose of this example, oh no, it's not going to let me turn my screen around. Here we go. Come on now. This is what you're going to see. And a lot of DeFi protocols look like this. They're going to have an interface where you can explore their yield opportunities, and then they're going to prompt you to connect your wallet. Once you've connected your wallet, let's see, it'll give you a lot of options for the kind of different wallets they take. I don't know if I'm going to be able to connect one of my social wallets while we're doing this. I'm going to have to unlock it. Oh, too many hands at the ready. But what's going to happen, let's see if I can go to my yield opportunities while we're doing that. Explore. You will look for a place to put your money to work. For example, when I click their Explore tab, I see a variety of markets where I can lend different collateral assets in order to take out a loan, or where I can loan one sort of asset that somebody else can use as collateral. This market allows you to be a borrower or a lender, and it either pays you interest or charges you interest. And it has a variety of other metrics too. But if this is an opportunity you wanted to participate in based on the assets that you hold, you would find it. You'd say, the loan token is USDC. Great. You would connect your wallet and you would lend USDC, or in this case, you would supply collateral token and then borrow USDC that you could earn an interest rate on, that you could do another, that you could use in other DeFi protocols. But that's the first step, is getting used to the interfaces, getting used to the steps, and then finding opportunities like this, because a lot of the interfaces will look just a little bit different. And the most conservative way to learn, the least risky way to learn, is to start with a stablecoin, because reducing volatility, that reduces one kind of risk. The second important thing is to go to a well-established protocol that does have high TVL, that does have independent audits. I happen to know that Morpho is one such protocol. But if you didn't know, that would be where you would spend some time looking around on a Discord community. You'd hang out at a live like this, ask somebody who's been here a while, and just ask them why. So I would say Morpho is a worthwhile protocol because it has independent audits, because it has large institutional support. You know, Coinbase is comfortable partnering with them to do different things. They have a variety of providers, people who actually do the work of coding these smart contracts or creating new lending and yield opportunities. So you have a wide marketplace to choose from. It's not like you just got to buy from one guy kind of thing. And they have high TVL. They got a lot of assets and it's growing. So all those things give me confidence. And if you need clarification on any of those, don't hesitate to let me know. Other such places you might go include Aave, AAVE. It is the largest DeFi protocol in the cryptocurrency space. It's also very easy to lend assets on Aave in just a couple of clicks. I would recommend you check out Marinade. We had them on the show last night. If you want to learn how to stake, doing it on the Solana network is a great, cheap, easy experience. And Marinade is one of the best in terms of how simple they make it to stake your soul and the kind of options they give you, the way that they're working to offer incentives for validators to compete, to share those incentives with people who are staking their soul to earn rewards. Those are cool. So start with those. And then don't hesitate to use something like DeFi Llama when it's up to check out other opportunities by searching the asset you want to practice DeFi with. Good question. Freddie says, when I hit it big, y'all come get in my pool. I like it. Freddie, I hope you hit it big soon. Thank you for the questions. Please keep them coming. And in the meantime, welcome back our friend, Mr. Alex Popovich. From the road, there he is. What's going on, man? How you doing?
We made it back.
We made it back. We've just been answering some questions about DeFi, talking about how to get started. And Tori just made the comment, sounds scary, in reference to Marinade. She said, stake my soul. Dun, dun, dun. Yes, your soul. So, Alex, I know that we wanted to talk about a little movement crisis, and we just had a comment from Moist Mike who said, not to throw you off topic, you mentioned movement. Did I miss something? And the answer, my friend, is yeah, you missed something. And I want to bring it up.
So did I, for the record. So I'm curious.
Okay, hold tight. Let me prep a little screen share and tell you that this is not necessarily a cause for tremendous concern in the sense that it's not an unprecedented sort of thing, but I see it as a cause for concern personally. And I think it's interesting to pay attention to, specifically because, Alex, we did a deal with the Movement Foundation before. We said, we're really not that interested in doing single videos. And God bless them, they let us make a video however we wanted. They sponsored a couple of videos from us. And we said, great, that's cool. We'd love your help paying the bills, but only if we have total creative freedom to talk about your protocol in a way that aligns with our audience. Everybody who pays you as a creator to do content, usually they just want you to talk about their talking points, their token, how to buy, why it's going to go up in value or price. And I just don't think that's a really great way to do business when you're a content creator who wants to build trust with people. I know Alex and Will don't either. So we agreed to do it because they agreed to let us talk about their protocol and talk about it however we wanted. And we were really interested in their integration specifically of the Move programming language. Sui does it, Aptos does it. It's a novel play at making blockchain better by implementing a native and helpful programming language, not like Solidity or Rust that have kind of been retrofitted for it. So we were excited about that. But recently, here's the news you need. Let me prep my screen share for you. Recently, it came to light that the Movement Foundation had signed a deal loaning about 50% of its circulating supply to a company called Web3 Port Labs. And this is an AMM, an automated market maker. They build themselves on X as a full cycle acceleration and investment platform. What these companies do is they help this token get listed on exchanges. They will take deals for big cuts of the token, or they will just buy a lot of the token in order to help trade it, to facilitate the making of markets. What happens is when a token gets listed on an exchange, especially if it's a decentralized exchange, Morpho is a good example. All those pools that we saw, all those DeFi opportunities were some companies with a lot of tokens saying, hey, we're going to create a smart contract where people can swap one type of token for another. We are going to fulfill that service, and we're going to put up some tokens to get everybody started. We're going to give it a little boost. When this first started happening in our space in 2020, 2019, maybe even sooner, 2018, automated market makers realized that they could generate fees for the protocol and generate fees for themselves by creating fake volume. When you have a lot of a token and you trade in or out of that token between that token and another asset, you can make it look like that token is pumping in price, is pumping in volume, is going up or down in value over time. It's a significant role, and it's come under the criticism of and scrutiny of like the SEC. It's one of the reasons why we have so much of their attention. And generally speaking,
flagrant market manipulation, just to be clear.
yeah, totally. It's flagrant market manipulation, but it has been a viable business model in the sense that many companies have spent a lot of time and effort and energy doing this. They realized that this was like a new job in the crypto space, mostly unregulated, and so a lot of market makers popped up, and their whole job was to go to a token company and say like, great, we'll buy some of your token. We'll create a pool for it here. We'll create a pool for it there. It was an incentive that was not really aligned with retail investors like us. And there are many tokens that you see all the time or hear about that people don't say this about them, but the truth is they're listed on an exchange because, or their price is going up because somebody somewhere like this with a big stack of tokens is pumping it that way. So the day after Move debuted on exchanges, accounts linked to this company that they had loaned 50% of their circulating supply to dumped 66 million tokens. And Binance picked up on this and they banned it, the trading of the token. They basically said, hey, we have noticed something weird going on with one of the market makers for Move, and so we are freezing trading for this token. Due to the market maker's behavior, the announcement said, for the purpose of best protecting Binance's users, we've taken additional steps as follows. We've informed Movement Labs and Movement Foundation teams of the irregularities with their market maker. We've frozen proceeds from the market maker for the purpose of compensating users. And we've offboarded and forbid any further market making activities by the market maker on Binance. Now, here's kind of the fallout to this and the implications. The Move team is upset. The Movement team, Movement Labs. There's a burden of proof on them because what people are speculating is you did this deal with this automated market maker so that they could move the price in ways that would be favorable for you. It backfired when they dumped your token, and your attempt to create like false perceptions of value have backfired. There's been a lot of criticism after like more looking at the Movement Labs team, just about how they have done their business in terms of making the token appear to be valuable in ways that are not necessarily organic. And this is one such accusation. Obviously, there are accusations. It's speculative. There's information still coming out. People are saying good for Binance because for a long time, Binance has sort of allowed this thing, or they've kind of cherry picked what they will or won't allow when it benefits them. But platforms, generally speaking, are hearing louder responses from people that they don't like this kind of behavior. And good on Binance. They do seem to be stepping in and having a more firm hand about enforcing policies like this. I think it has to do with regulatory. They want to be friendlier to the regulators. I'm just speculating. So, Alex, it's not necessarily that anything is wrong with the Movement Foundation. We're waiting for more information to come out. But, Alex, do you have a take, a thought, or something I missed that people should think about?
Yeah, so I would agree. Good on Binance, because if we don't want this kind of stuff, then there needs to actually be some sort of penalty for participating in it. And I would agree. I don't like this kind of behavior. I think it's shady. And if you're, I don't know. I mean, what? It's very hard to find a silver lining in market manipulation. I guess if I was forced to say like one nice thing, it's like, okay, well, at least we're not talking about an exploit or something where literal consumer retail tokens or money is at stake here. But obviously it really puts your investment at risk when you're found out to be doing shady shit. So I hope that this kind of thing, like I hope something is learned from it. I mean, I think Movement could recover if they issued a statement about it and then didn't do it anymore. Or I don't know if there is even really a mechanism by which you can reclaim how many tokens you've lent out, or if I don't know what the terms or the specifics of their contracts are for all that kind of stuff. But I mean, no, it's shitty. I'm not stoked on it. It's disappointing.
Yeah, it is disappointing, and it's a problematic thing with the crypto space. It's something we all need to be paying attention to because it's happened for a long time. if I had been more prepared about this, I really would have made this a Rise Up Rewind segment. And maybe on a future show, we can do a history of automated market makers. I actually think that would be really helpful because one of the innovations of our space is the ability to have automated market makers. In traditional assets, you have a market that opens and closes because it is mostly facilitated at some level by humans. It is not automatic. It is automated in some places, but largely speaking, folks maintain it. They got to go to bed. And that's why we have like a trading day, you know? The market is open, the market is closed. There's pre-market, there's aftermarket kind of activity. In crypto, the innovation is that because we've got these pieces of computer code, these smart contracts that can facilitate the assigning or reassigning of digital assets, what we would call the moving of money, but which is actually just, you know, entries in a ledger. The computer can have rules that it functions like a calculator to assign or reassign based on the requests that people make. And using a network of computers, no one person has to own it. But that means that if somebody comes in and meets the rules and wants to move money, the smart contract is going to let them. So it's an interesting topic, and it brings up a lot of implications about like what it means to be centralized, what it means to be decentralized, and when it's good to have somebody like Binance who could say, you know what, if they're a good actor, we got to stop this kind of behavior in a world where anybody can do anything. So stay tuned for that. In the meantime, Alex, we have a good question here. If adding virtual protocol, kind of a switch, to your Tangem or other cold storage wallet, how do you know which network to choose? Alex, it's a little bumpy there, but I'm going to ask you to tell me, how do I know which network to choose when I'm sending assets to a cryptocurrency wallet for the first time? What would you look at?
First I would want to know, if I have the possibility that this thing could be on multiple. So I want to know what my choices are. And so I would probably look at something like CoinGecko to tell me, what all networks, token, whatever we're talking about here is living on. And you would be able to see that over on the info side underneath contract. It'll show you which chains it has an address on. In that sense, usually and I missed it in the question, is this coming off of a centralized exchange?
It wasn't stated. So let's account for both scenarios, a centralized exchange and a decentralized, or a wallet.
Okay, so the decentralized option is actually a little bit simpler just because as it's sitting in whatever wallet you're using, it's going to be reading on whatever network it lives on. So you'll only have one option. You'll be able to see where it's sitting. And so in this particular sense, it looks like you would know pretty much immediately looking at a hot wallet whether or not you were an SVM wallet or an EVM wallet, like, a MetaMask or a Coinbase Smart Wallet or something like that versus something like Phantom.
That's right. And for the people who can't see, Alex is saying that because we've gone to CoinGecko, we've verified the contract lives on Solana and it lives on Base. And I feel like virtuals might also live on Sonic. I could be totally whiffing this, and CoinGecko might be underreporting, but it definitely is an EVM, meaning Ethereum Virtual Machine Compatible address for Sol and Base. So that's going to help narrow down your choices tremendously. Once we go to our wallet, Alex, let's say, it's on Solana, or I know it's on Solana because it's in my Phantom wallet, and I always use Phantom to do Solana stuff, but I want to double check. Like, it's in my Phantom wallet. How would I go into my wallet and see what network it's on? What would I look for generally?
So at this point, it's gotten super simple, and you can just look at the page that catalogs your assets, and they will all have a tiny little icon over the bigger logo for whatever that asset is that shows you which network it is on. It's either going to have the Sol logo, the Polygon logo, the Base logo, whatever network you're currently holding those tokens on. On the other side, if you're trading it out of a centralized exchange and you're looking to withdraw it to an external wallet, it's kind of dealer's choice. Like, if you want to keep it on EVM, go for it. Usually when you're holding assets on a centralized exchange, you are not specifically differentiating between different blockchains. So like if my Coinbase account has some Sol and it has some ETH in it, I'm not specifically looking at the fact that I'm carrying it on Solana and on Ethereum. I just have them in my Coinbase account, and Coinbase is custodying those things for me in the appropriate place. And then if I go to withdraw, I would have the option of choosing a network at that point, and I would just want to pick one that I know the wallet I'm sending it to supports, and one that I know the token I'm sending actually lives on. So it's kind of hard to mess it up, just because if you're looking at a hot wallet, now there's icons and little blips everywhere, and there's more and more and more safety features on the sending to make sure you're not trying to enter, an EVM address when you're trying to send a Solana token. And same thing on a centralized exchange. If you're looking to try to enter an address to a blockchain where there's no support for this thing, then it's going to be like, hey, buddy, slow down and check that address, because that ain't right.
Yeah, so let us know where the asset lives, and you'll see that in your tangent too. Make sure you only send assets on blank network to this address. And the final check is addresses look similar when they're on the same network. For example, whether I'm on Ethereum, Polygon, Base, Optimism, Arbitrism. That's like if Arbitrum
and Arbitrum.
Yeah, exactly. I'm trying to bring them together. They all are what we say is EVM compatible, Ethereum virtual machine compatible, which means your Ethereum mainnet address is going to be an address that you can use to send assets all those networks. It'll know automatically if I send USDC from Base to an Ethereum address to sort it onto the Base network. It's simple. If you see that your assets are on Sol, then the address will look similar as it will in your Tangent wallet if it says, do you want to receive these assets on Sol? And you'll see it starts or ends with, a different sort of format than the 0x format of Ethereum or the BRC format of the Bitcoin network. And you'll start to recognize these things over time. But it's a really good question because, like we talked about yesterday, if you send your assets to the wrong network, in some instances, many instances, they are irretrievable. Someone said, explain that to my grandma. Well, here is how I would start. I would say, if that's confusing to you, or if you'd like a real visual breakdown step by step, I recommend you get started with a playlist that I've created called Learn to Use Crypto. It's at my TikTok profile, which is Conversations with Evan. Search my name, you'll find it. Watch out for the imitators because they're everywhere, but the legit one is me. And right at the top of the profile, there's a little button that'll say Learn to Use Crypto playlist. It takes you through how to buy, how to sell, how to send, how to receive, how to store your crypto securely, how to turn it back into cash. And it uses examples with screen sharing of Coinbase to Coinbase Wallet, Coinbase Wallet to cold storage. We talk theoretically about what tokens are, why they matter. What is a smart contract? How can they be used? And in the rest of the videos of the series, I'm going to do more dedicated explainers of this is what a common scam looks like, or here's how to participate in DeFi to earn yield. And then eventually I'd like to just have a total monopoly on the screen share market of this or that tutorial. How to send from Coinbase to Tangent on the Sol network on TikTok. But in the meantime, I've got friends. Alex has a fantastic set of videos, Crypto in 60 Seconds, where he takes a complex or jargoned concept and simplifies it without any jargon at all so that even your grandma can understand it. And speaking of grandmas, we got to shout out our friend Himu Rahman. You can find him by searching his name, HemuRahman, on TikTok. He's also on X. And he has a series called Teaching Crypto to My Grandma. He's going to explain crypto so that even your grandma can understand it. And let me say about grandmas, just because somebody's a grandma doesn't mean they can't understand crypto. We happen to know many grandmothers who are real savvy with crypto. They come to the show. You know who I'm talking about. I have several people in mind that I am thinking of right here, and they hang out in the Discord and they are teaching other people how to use this stuff, not just in our community online, but in their day-to-day lives. I got to say, Alex, one of the things I am most proud of is every time I hear a story from somebody who saved someone from a scam or who helped them understand the difference between speculative cryptocurrency and maybe an investment like Bitcoin. And it just warms my heart. So if you're thinking, I'm too old to learn this stuff, or I'm too stupid to learn this stuff, listen, we're not going to dumb it down for you. This is about elevating everyone's understanding by making this accessible. And you know what the real secret sauce is that we're doing it together. When we all get in a room together to learn something new, share what we know, we learn and grow together. It accelerates your learning journey, and the relationships you build will help you to stay curious even when it's hard. I got to be honest, if Alex and Will weren't here, I probably would have vamoosed on this thing a while ago. If all of you weren't here, we say you're the best part of the show because you give us a reason to keep coming back. It makes me excited, Alex, to wake up in the morning and do this as like the first part of my workday, because I know that people out there really need this information. And if we don't share it, who's going to? So all that to say, keep coming back with your questions. If it's too difficult, don't hesitate to take it one step at a time, starting with the jargon. And then definitely jump into a community. It doesn't have to be ours, but ours is free. It's discord.gg/riseup. If you've never joined a Discord server before, we've even got tutorial videos to help you get there. You can find that and all of our links, like to past shows, at theriseupmorningshow.com. And you can even start a free membership trial. We do have membership services that help you make things like coaching one-on-one with us or the classes we offer cheaper, more affordable over time. It costs less than Netflix, I think, does now. And it's an ongoing experience that we hope to make more valuable over time as we continue to deepen and broaden the community. So check it out. Join for free. Come for the friends. Stay for the knowledge. Yada, yada, yada. Rise up. You know, it's a great community, and the only thing missing is you. Alex, did I miss anything? That was like a long commercial, but felt important.
No, I don't think so. I think that was pretty. I will say that if you are a premium member and there's something that you would like to see, then just throw it out. I'm constantly looking to source suggestions because my one of my deepest fears is that it's not valuable enough. And so if there's something in there that you would like to see, then just ask. Same thing with all of those playlists that Evan mentioned. Like if there's I need to make more of the crypto in 60 seconds videos. So if you want to request one, please feel free. Same thing with the PDF guides or the classes or anything like that. Like, just throw it out there. We're aggressively listening and adding new things, new features, all that good stuff. And especially now with the ever drawing nearer circle migration, I think we'll have some options to just make it bigger and better.
That's right. I had a really good onboarding meeting with them. They have given us a thorough roadmap. They've got a whole team dedicated to like helping us set this community up well, and it's a lot of work. It's going to be a lot of work, but I'm excited for people to see it. Oh, thought he was coming back. He rugged me. And there we go.
Sorry, just driving past a very loud truck, and I figured it was going to be annoying.
No, it's okay. I want to get this question from Tori, this comment from Tori, and then I'd love to do some final thoughts and take our dogs and ponies on the road for the weekend, because it's not going to hit a higher note than that. Tori said, "Why are there so many grifters? I wish I could tag people with a warning. So many grifters." And I think we could do a token for this. Somebody has surely done a token for this. It sounds familiar to me, Alex. Does it sound familiar to you? I'm sure there's a soulbound token out there. The same way that we've talked about doing soulbound credentials or other kinds of tokenized credentials for you took a class or you got a mug, so here's your POAP. If nobody else has done it, and even if they have, we could do a Rise Up Grifter badge, which is like you grifted. You grifted.
You're officially a grifter.
Yeah, and just send it to their wallet.
I mean, it's unfortunate, but at the beginnings and in the infancy of absolutely any industry, especially one that has such heavy financial ties as Web3 blockchain cryptocurrency, you are going to have those who come out and grift. You saw it in the beginning of the internet. Everybody under the sun was buying domains and selling them and trading them. It was just like NFTs. You were only buying them because you thought someone was going to eventually pay you more for the one that you bought. It was the same old shit. There's always a pyramid scheme craze in the beginning. So the reason is The reason is just because there's money attached, and because when it's new and the technology is harder to understand and there's fewer people who have a good grasp on it, it's easier to swindle people. Swindling is never easier than in the beginnings of an industry. So that's why you learn about it, because that's the only real protection you have against just being repeatedly grifted by people who know the buzzwords, know the jargon, can read you a real schnazzy sounding brochure that actually has absolutely nothing behind it. And as soon as you realize that any cryptocurrency can be launched by, 3 dudes in their apartment and like a very basic understanding of, I don't know, some basic website builder and a Twitter account. There you go. That's all you need to launch a Fortune 500 company at this point.
Basically, geez. Or, a company whose market cap is bigger than Starbucks. Anyway, we had one more good question that I do want to answer. We had one. 2, actually. So the first is, I will repeat the Discord for you. Discord.gg/riseup. But the real link you need to remember is just the riseupmorningshow.com, the name of the show. If you search the Rise Up Morning Show online, you will find us. And then you will find the Discord server. And if you don't, to the show and leave us a comment, we'll make sure you get it. Discord.gg/riseup. A lot of the best yields on DeFi Llama aren't on Coinbase or Robinhood. Any thoughts? This goes back to what we were talking about earlier, where if you want to participate in DeFi, Alex, you weren't online, so I'm going to kick this to you quickly, but the explanation I gave was the steps to get to DeFi involve turning cash into crypto, probably using an exchange like Robinhood or Coinbase, and then moving your crypto to a self-custody wallet. Because I explained, you can't do everything with crypto on Robinhood or Coinbase that you can when that crypto is in a wallet that you own and control. And that's because, they got to make money on it. They only can take on so much liability. They don't have the time to vet every single protocol. And so, because what you have when you have an account with Coinbase or Robinhood is an account, not a private key that you own directly, the ability to access and control your crypto completely, you need to go to a self-custody wallet before you can take advantage of most DeFi opportunities. Do you have anything to add or intermediate steps? Some people ask about buying crypto in wallet, and I always say don't do that. It's so expensive, but
yeah, I'm going to make a couple videos about it just because I've had a lot of people commenting lately about the profit-taking strategy, just saying well, they're not trading with enough to make the fees worth it. And I'm always saying well, you guys are just trading in the places with the high fees and you can go trade somewhere else. So I'm going to put together a list of examples and do that. The simple fact is that with these DeFi protocols, often they just have significantly less overhead. And the point of it is not to middleman the ever-loving shit out of you. So you don't have as many people taking cuts, and there's, Coinbase and all that kind of stuff may be using cryptocurrency and Web3 tools, in their day-to-day business, but make no mistake, they are a Web2 business. It is a large company with a bunch of employees that has a tremendous amount of overhead, and they want to make their cut, so they take a lot of money to, facilitate their services. And maybe they pay you some better interest rates here, there, whatever, but, they are a for-profit company. I do have to jump here. So the only other thing that I was going to say is I think that there was a little bit of confusion as we were talking about Circle migration. We're not talking about Circle as in the provider and the creator of USDC. We're talking about moving our community from Discord to a place called Circle. So I don't want to confuse anybody by making you think that we're talking about something happening with USDC. USDC is on a bunch of blockchains, and I'm sure they will continue to add more as long as more keep coming out and being worthwhile.
I missed that. I responded to that question. Okay. I know you got to go. So you good with that as a final thought, or do you want to give one more? Because I'll wrap us up.
Yep. No, that's good. I've got a number of videos I'm going to try to get out in the next day or two. Just about some different DeFi tools, and then, like I said, trading with lower fees, just because I know that if you're trying to take profit on smaller amounts and you're using something like Coinbase, paying an $8 fee every single time is really not sustainable, and it can really take a big dent out of it. So
no, and I got to tell you, Coinbase one is the move.
Yeah, if you're doing that, then absolutely, 100%. Just it is worth it if you're trading with that kind of volume. And then the last thing I would say is just remember that even if you are doing that, those fees are tax deductible. So keep track of them.
Yeah, excellent. Thank you for another great week of shows, Alex.
Of course, it was a good one. I'm excited to get right back into it next week, and then we are drawing ever nearer to consensus. So stay tuned. We'll have hopefully some good updates in the near future about what you can expect from consensus. And then if you're going there, then we'll be seeing you soon.
Yeah, we sure will. Be sure, if you haven't already, to check out in the links for this episode where we do the podcast, where we do the YouTube replay. I am going to include a link to our event. It's totally free. We're going to get together for bowling, blockchain conversation, maybe some little small bites at a place called the Ballroom Bowl. Tell your friends, tell your mom, especially if they live in Toronto, to come hang out with us. It's going to be Thursday, May 15th. And you can register totally for free. We're going to have our friends from Polygon there. Nikki said he'd come by from Marinade. I hope to have Lindsay there, formerly from Stellar and now of Seeking Alpha, and who knows where she'll be next. All of our other friends, we're inviting them there. I invited a bunch of friends from Tall Dow, leaving Short Dow in our shadow. Thank you very much, since at least 2024. And we'd love to see you there. We absolutely would. We'd also love to see you in the Discord community. And I will say the Circle community is going to be fantastic. Circle, if you don't know, it's like a hyped up version of School with all the features of Discord plus some extras, but the usability of like a Facebook group. They even have their own like automations, so we can really personalize the experience. When somebody joins, they'll get a message that, you know, I can craft, not just like some stupid stock message. And depending on the kinds of actions people take, we can automate other kinds of, you know, hey, you should meet this person because you both like real world assets. Just such cool stuff. And the most important thing is the verification on entry is way better than Discord. Discord is a lot like TikTok, a lot like Twitter, where there are impersonators. If somebody joins the Discord community, I will say this is my final thought. You got to watch out for impersonators. You should turn your direct messages off. You should never accept direct messages. And Alex and Will and I and all our friends and moderators in the community, we will never message you unsolicited. We will never try to get you off the platform into Telegram or somewhere else. And we will never try to sell you an investment or offer to invest money for you or anything like that. We're just not going to do it. As a policy, we don't reach out to people like that. But there are people who will on every platform where we live. Because we talk about investing, we talk about crypto, we talk about AI, new technology, who will impersonate us to leverage the trust we have built to try and take your money. So please do not fall for it. On Discord, on Facebook, on TikTok, anywhere. And just know that we're working on a community where we can keep everything in one place and help everybody stay safe. So, my friends, thank you for being the very best part of what we do. Check out the links at theriseupmorningshow.com. Check out the podcast. Like us, really like us, and leave us a review. And then come back next week. We'll be here same time, Monday through Thursday at 7 a.m. Central, and Wednesdays for Rise Up After Dark. Until then, my friends, everybody stay safe. Be well.